What's going on, y'all? Rome back with another video. So, uh, after having to take a break on this, man, and really sit here and understand what's going on with the markets. So, tell you a story real quick. Y'all know I've been switching strategies. Y'all know that is a no-no in the community when it comes to trying to be successful at Forex. You don't want to switch strategies. That's one of the biggest no-nos. But if your strategy don't work, if your strategy shitty, if your strategy suck, maybe it might be time to go see what's up. And so, sorry, that was me moving the seat back just a little bit. Um, let's get into it. So I'm gonna try to blow through this kind of quickly because I want this to be a quicker video. But I will say I was able to secure $187. Now, I obviously could have secured more. If you look, this is where I was taken out because I was trailing my stop loss. And I probably should have just had it above that candle. And then once it's doing what it do now, and if it broke below this candle, then maybe I can move it to this lower high here. So what I learned is it's all about market structure. This is a gem. Write this down or just take this with you if you don't get nothing else from any of the videos that I post. If you don't understand market structure, if you're not trading with market structure, you do not have a successful strategy. I'm going to say that one more time for the people in the back. If you're not trading, people in the back, if you're not trading with market structure, you do not have a successful strategy. The reason I say that is because you could buy the trend, you could sell the retracement. If you understand market structure, which structure broke, where your point of interest is, you're doing it. You can generate at least 100 pips a day before the market decides, hey, I'm on a reverse. So let's get into it. All right, so here I'm on a 1 minute. I never thought I'd be trading on a 5 minute or a 1 minute. That's a crazy thing that it's going to be hard to teach in one video. The information that I learned this new strategy that I got it from somebody. It was a gift to me. This strategy was a gift to me that I've been sort of trying to just not trying, that I've manifested. I've been able to manifest a gift of this strategy. It was 3 hours worth of information, and I wrote down everything that I could to be successful with this strategy. So we got about 5 major things that needs to happen before we can take a trade. 1, we want to see where structure broke. 2, after structure has broke, we want to identify the point of interest. 3, we ask it and we understand and locate imbalances or fair value gaps in the market. 4, we look for, once this move happened, was there liquidity that happened with this move? Did it go up and take some people's stops out and then sell? Or did it sell, take some people buy stops out and then buy? So that's the basically the liquidity that we want to see. And the 5th and last final thing that we looking for is the fair value gap. Another thing I learned is they have second charts, 15-second, 30-second charts. These charts on TradingView produce information very similar to some of the charts that you see. On these lower time frames, you can spot even tighter entries for major profit gains. So with that being said, I can confidently say I literally just had like a $13 stop loss with like a $200 gain, take profit. I saw the market started to play around, so that's when I started closing my positions, and as you can see, it looked like it may continue to buy, which is okay. But like I said, you can buy the move and sell the retracement, and you have to understand market structure. So let's get into it. I don't know how far we in a minute. Oh, 4 minutes and 50 seconds. This is where the strategy begins in all its glory. So first, we had a strong move to the upside. So ultimately, if you go on a higher time frame, H4, this is a downtrend. Well, it was a nice downtrend. Maybe it broke structure now, but even though it came all the way up, it didn't break this high. It couldn't break this high. So still, ultimately, we're in a downtrend. And to even confirm it further, if we went to the day one, obviously down, no highs have been broken, and then a week one, same ordeal. Everything low. Let me take off this trade history so y'all can see the charts just a little bit better. I'm sure y'all seen. I didn't mean to do that, but I'm going to just delete that square real quick. So I had the most patience I think I've ever had. All right. So I was looking for buys the whole time. And I'm like, okay, I went to look at the news and I saw that at 8 o'clock or 9 o'clock, one of them, basically a candle was coming out. So I was like, okay, I just have to be patient. Boom. I waited patiently and I saw this big gap. This move started doing this. And I'm like, damn. Part of me wanted to wait for it to retest, and it did. It actually retested into this candle and then bought. So if I would have been smarter about it, I would have been able to get in, and that would have popped up, and I would have had so much profit. But I didn't. I didn't fret. I'm like, okay. In my strategy, in my notes, it talks about what's the missed move. So when you see a large move like that, the candle's going to retrace. I mean, it may consolidate a little bit, but it's going to retrace. And if it does consolidate, nobody's to say or know that it's consolidating on a 30-second time frame. So you just want to look for things. So first thing that I saw after this move to the upside was that it started to push down. So I wanted to see a lot of things. I was very patient, like I said, probably the most patient I ever been. So in the 1 minute, I marked up with one box the fair value gap and the zone. So let's see, let's put this here somewhere right there. The reason I put that there is that's separating the zone and the fair value gap. The zone is our point of interest. Our point of interest is the last up candle before it started to sell. In a buy, it will be the last down candle before it started to buy. This is why this box is actually on this black candle right here. It's made for this last black down candle before this up move. So I guess I should have just been looking at this one. It retraced into that, and then that was supposed to actually be the last down candle. And then if I would have bought, I could have bought. But like I said, did not fret. On the 1 minute, I came over here and I saw that boom. What happened? It broke structure right there. Boom. And I'm like, okay, that's perfect. Now I have a new point of interest, this last up candle. So boom, it also created a fair value gap, which was just this little area right here. So when I looked at that, I'm like, okay, everything is adding up perfectly. So we also see that it took some liquidity out. So I was like, okay, boom, that's number 4. And the last thing that I had to do, and this was tricky, is, shapes, put on a Fibonacci. Now, this is what's important. We got our structure break to the downside. We've identified our point of interest, and we've even located some fair value gap. For this strategy to be A plus, it needs to bounce off of the 78.6 or 88.6 zone. Now, I promise you, before I continue, I just want to say, because some people probably, if you watch all of my videos back to back, you'll see all my strategies are not the same. I am in the learning boat and I am trying to succeed. So my strategy has switched accordingly. But this one is, for me, I'm going to say it, it's the holy grail. I don't care what nobody say. Market structure is the holy fucking grail. No market structure, you can do anything. So let's continue. I put the Fibonacci on. The Fibonacci is the last confirmation that you need. It bounced off of that 78.6 and 88.6. It bounced perfectly. Actually, I don't even think that was that the down? It was, I feel like I had a different area before. I know when that shit bounced. Let me see. It was something like that. I feel like we hadn't broke yet. I don't think. I don't know no more. I don't even remember no more because from what I'm looking at, it looks like maybe okay. Maybe I'm doing this wrong. Maybe I'm at the wrong part. Maybe this was the candle that I wanted to see. Nope, it wasn't that. So I don't know why, but my chart ain't lining up how it was before. So because when it did, I swear one of them lines was touching perfectly like that or something. It seemed like it was anyway. That's why I'm like, I know it broke structure, and that's what made me even look at it. So I feel like this was what it was. Now, that may be true. Let's go to the 5 minute real quick. Yeah, so I'm assuming that that's what it was. Now, the reason that for me that it was tricky is because the 88.6 to 78.6 zone actually didn't all the way align. So if you look, I'm trying to get it to where you can see it perfectly. If you look, this is my box, this is my fair value gap. My fair value gap is in between 61.8 and 70. Now, that might be something, that might be somebody's strategy, but it's not mine. I have to wait for it to get to the 78, 88.6 area. And it damn near looks like it bounced perfectly off of that 88.6. I'm going to put my trade history back on real quick so I can see where I entered because I'm getting a little confused here. Okay. So, yeah, it broke structure again. Let's take history off. It broke structure again. We need evidence. Evidence. So boom, it made this higher high, pulled back, zigs, and then zagged, and then broke structure. That's what we wanted to see. When it got to our zone, it broke structure. First, it broke structure up here, down here, boom, and then we was able to identify a point. Then it broke structure in our point. That's what we was looking for. That was the true confirmation. I mind you, I'd already started taking buys as I saw it selling in this rejection area because it bounced off at 88.6. That was good enough for me. But once it broke structure again, I actually added a position and let it ride until I start playing with me. So with that being said, um, I was able to truly catch this move, and that's what we're doing in the market. We want to use our edge to catch moves. So once I put that Fibonacci and entered the trade, like I said, I wrote it down. So I'm gonna go over those one more time, and I'm gonna just use a little marker here. Okay, one. Actually, let's turn that off. I need to get a little closer, and we gonna follow this baby on down. One, we broke structure to the downside after a giant move up. Don't forget that. Two, we identified our point of interest. Three, we located an imbalance and or fair value gap, whatever you want to call it. Four, liquidity has been taken out from some of the highs. And five, the Fibonacci. 88.6 was a perfect bounce. Enter the trade here, ride it to these lows, or try to maybe hold it to these lows if you a bold mother sucker. Because what looks like it usually happens is it's going to come back up here. It's going to bounce into this zone. If it's a true sale, it's going to bounce right into the zone it's at, and then it's going to sell again. I'm scared to get into that. Only way I could get into this with confidence is if it bounces off of this zone here and then breaks some type of structure. So it pulled back there. So this could be a structure. It has to break that for a sale to be confirmed. You will put your stop loss here and again ride it to maybe this low for a quick 1-to-1. Maybe this low if it's really gonna sell, because you know the market is fractal, which means it's gonna do the same thing on a smaller time frame. So real quick, I just wanted to show y'all that, man. That's gonna be the end of this video. Um, I'm not going to take any more trades. I'm satisfied. I'm going to get back to the charts. I'm going to study. Oh, that looks so enticing. Y'all just don't understand, man. Because I bet you. Let's just do it. Let's delete this real quick. We'll take a point one. Just real quick. Just real quick. Even if I don't take the trade, I'm going to, you know what? Let's get this point one scoring right now. Point one. And then I'm going to put my stop loss here and my take profit here. Now, I didn't wait for the structure break, but I'm taking the trade now because I do believe it's going to sell before it continues to buy one more time. But let's see if we've identified these 5 things real quick. Let's see if we can do this. One, it broke structure to the downside. So we've identified a point of interest, which is this, actually it's this last up candle. Sorry, box a little janky. Boom, last up candle. So actually, I'm gonna put that on the screen real quick. Boom, we broke structure. We have a point of interest. 1, 2, 3. Do we have a fair value gap? Sometimes it will not be a fair value gap. The fair value gap is actually, it depending on how you draw it up, it is, sorry, let's get that pencil off the screen. It is located here. So that was filled in rather quickly. Some people wouldn't look at that as anything. Look, it's breaking structure, but it could stop right there and continue to buy. Oh, it looked like that's what it want to do. Even though it has really strong volumes to the downside, so it could continue. But let's continue. We have 1, breaking structure to the downside. 2, point of interest. 3, fair value gap. 4, it looked like it took out some liquidity. Honestly, it does. Right in this area, because this was a high. It zagged and it zigged. This was a high. It took that out, liquidity. And then 5, I want to put the Fibonacci right here to see what zone that we are bouncing off of. Oops. That's the top. That's the bottom. And bow. That is almost a perfect bounce off of the 78.6. So put our fair value gap back. It broke, sold again. Boom. A million ways you could have played that. You could have, you still, what I mean is take profit. You could go for a 1-to-1. You could use your zones, 38.2, 23.3, 88. I mean, I guess 0. Yeah, you could shoot for any of those zones. That could literally be your take profit 1, 2, 3. Um, Mind you, it's something you always want to take into consideration. Uh, this last large down candle could be because it made this up move. Actually, it made a higher high, so I don't think that's valid anymore. Yeah, I don't believe that's valid. It could be though. If it close above this, maybe that's time to get out the trade. But y'all see the trade working out extra perfectly. I just risked a little bit just to show y'all, and just to teach y'all a little bit. So this is a confident way to make some money in the market. I don't want to give nothing back, so I'm gonna close this trade because it bounced off of the 23. Take your profit at